to the Hot Stock Pick of the Week. I'm Ann Sosnowski. In late 2005, palladium was worth around $200 per ounce. Today, 1 ounce of palladium is worth $348, a gain of 74% on the commodity in only a year and a half. So far this year, palladium prices increased by 3.37%, and its price trend going forward is mimicking that from the late 1990s, when palladium hit a high of $1,400 per ounce. Now, palladium prices are driven especially by demand from China. Instead of platinum, Chinese jewelers are cutting costs by using palladium instead of platinum, which has soared to $1,240 per ounce. Chinese demand has boomed to at least 1.43 million ounces on an annual basis just for jewelry. Of course, you can't have palladium without having platinum. Mines usually produce the same amount of each metal, but palladium is typically used in catalytic converters. While palladium prices are increasing, they remain far lower than platinum and still offer far better growth potential going into the future. A company called Stillwater Mining, ticker SWC on the New York Stock Exchange, is the only significant primary producer of platinum group metals in the Western Hemisphere. Now, this company is launching a campaign to promote the use of palladium in jewelry, specifically geared toward China. Even though Stillwater's palladium isn't used for jewelry, the value of its palladium per ounce goes up consequently, and that's really all that matters. Stillwater is a palladium and platinum miner based in Montana. It currently operates the Stillwater mine, another mine called the East Boulder mine, as well as a smelter and base metal refinery. Now, as of the end of 2006, SWC has proven reserves of 42.4 million tons of platinum, with a proven grade of 0.54 per ounce, and 23 million ounces of palladium plus platinum. That turns out to be about 678.4 billion ounces of grade platinum, worth $1,240 per ounce, on top of $8 billion worth of palladium. Now, most importantly, SWC is finally profitable. During the fourth quarter of 2006, Stillwater posted a quarterly profit of $2.8 million, or 3 cents per share, compared with a loss prior of $2.9 million, or 3 cents per share, the same period in 2005. Now, SWC's revenue grew 31% to $175 million in the fourth quarter alone. The overall realized price for its mined metals increased to $499 per ounce, a gain of 6.62% in only 3 months. In addition, the company's platinum group metal recycling and smeltering business is boosting profits as it recycled 349,000 ounces of catalytic materials, palladium's most likely use, as mentioned before. Now, this made the company's $19.5 million in gross operating margin. For the year, Stillwater made out with $7.9 million in profit compared to a loss of $13.9 million in 2005. SWC reached its estimates even though it was forced to shut down some of its mine due to wildfires. Now imagine how it'll make out this year if not one of its mine has to be closed. Stillwater plans to achieve and maintain proven reserves equal to about 40 months of production. At year end, it was up to 33 months of production. Now, over the next few years, Stillwater plans to make its mining operations more efficient. It will upgrade its metallurgical processing facilities, it's going to complete some new ventilation projects, and increase miner training programs, therefore reducing its dependence on outside contractors. To help promote palladium, SWC will continue to work with its palladium trade organization called Palladium Alliance International to promote the commodity for jewelry making purposes, especially in China. Now, most importantly, SWC owns an 11% interest in a company called Pacific Northwest Capital Corp., a Canadian exploration company that will identify more platinum group metals, or PGMs, reserve targets for future mines. Late-stage company acquisitions will boost Stillwater's profits while it moves toward its goal of being 40 months ahead of platinum and palladium demand. Now, future guidance from the company anticipates PGM production in 2007 of 205,000 ounces from its East Boulder mine and 440,000 ounces from its Stillwater mine, in total about 7% over the previous year. Now, it expects to process 10% more PGMs, including rhodium, in its mines and through recycling a total of 1.05 million ounces. The company currently has $195 million on hand, including $123 million in cash and investments and $22 in revolving credit facilities. Auto catalyst demand alone for both platinum and palladium has increased by 10.29% since 2003 due to both continued gasoline-fueled vehicle production as well as hybrids. This growth looks to continue, especially with the hybrid market, into at least 2010. Now, even though the company only recently became profitable, its financials are still extremely positive. SWC has a low but growing profit margin of 1.29% and a very healthy 31.30% quarterly year-over-year growth. Stillwater's daily chart shows that it's in a new rising trend. For the first time since 2005, it has gained long-term support at its 200-day moving average. Now, this small-cap platinum and palladium company is currently trading for about $16 per share. The last time SWC jumped above its 200-day moving average support, it continued on for a gain of 119% in only 6 months. From its current price, you could absolutely see similar gains. I recommend that you buy Stillwater Mining Company. The ticker is SWC on the New York Stock Exchange at its current price. Please use a 25% trailing stop with this recommendation. For TFN Financial News.com, I'm Ann Sosnowski.